have a drink with our guests is amazing. So today, I got my man Joseph here with the Casella Sales Group, right? And yep,
Could you start over again? We had an audio thing. Could you just start over again?
I'm in.
You can't see him.
Are we good?
Just reintroduce him. We had an audio.
Perfect.
You're good now.
All right. All right, let's start that over.
Let's do it.
Redo it. So, welcome, ladies and gentlemen, to another Tuesday episode of the Cash Geeks Network. As you guys know, we bring the heat, we bring the fire, real people doing real deals, real estate superstars, rock stars. And today, I got my man Joseph here. It's funny because our producer, Mike, shout out to Mike in the back. So our producer, Mike, was at some real estate presentation, right? And we'll get to that.
Yeah.
And Mike immediately called me, was like, yo, we got to get this guy on the podcast. This guy just crushed the room, tons of information. I was like, let's do it. Here we are.
It's good to be here.
Joseph, let's just get right into it.
Sure.
What is it that you do and how do you help people?
So it's first of all, thanks for having me. And it was great meeting Michael too. I am a loan officer. I am a loan officer and I work for a mortgage broker. I work for two of the best guys in the world. I work for a company called First Coast Mortgage Funding. It's owned and operated by two local guys, been doing business in this city for a long time, 20 plus years. Their names are Aaron Backus and Jason Kinlan. I want to give a shout out to them and say thank you very much for having me with their family, because that's what it's
awesome.
like there. It's a family there.
That's awesome. And so tell me a little bit about the kind of business that you're doing right now. What do you specialize in? Who do you like? Are you helping out more refis? Are you doing more home sales?
Yep.
Give us a little bit of information about what you're rocking.
Say 98% of our business right now is purchases.
Okay.
Obviously, with the rates being higher right now, the refinance market is basically non-existent.
Okay.
It still happens. I have done a couple of refis lately. It was people. The biggest thing with the refis right now is, a rate, you might get a rate for 7.5%. But when you look at your overall financial portfolio and you're paying 20%, 25% on credit cards, and it was announced today that credit card debt is at an all-time high in America.
Yeah.
It's approaching $1 trillion. I think
crazy.
the number today was $988 billion that America has in credit card debt. So a lot of times when we talk about the refinances, people say, oh, I know, Joe, I have all this debt, but I don't want to refinance because I don't want to lose this 3% rate that I have. And I take a second and I say, I get it. I love that 3% rate. But let's take a look at your whole portfolio. If you have 5 cards and you're carrying an average of, say, $10,000 in those cards and you're paying 20% on those cards, well, average it out. Your 5 cards at 20%. And one mortgage low, well, you're better off taking that loan out, using the equity in your home, paying off all that debt. Because let's be honest, if you're paying 20%, you're never going to get out of that hole.
Right.
You're not. You're barely making the interest payments on it. So that's why the refinance is really dried up, but it's still a good option. Right. It's still a great option to get out of that hole. I like to do purchases. I love first-time home buyers.
Okay.
One of the reasons I got into this business and one of my passions is helping people. Right. I think one of the best pieces of advice I ever got from one of my mentors was, people do business with people they know, like, and trust.
Yep.
And trust is the biggest thing for us. I love establishing that trust. That's why I love being in person.
Yes.
Just like you said, it's really hard to be on a Zoom. It's really hard to be in a phone call, to feel that energy.
Yep.
To know, are you really engaged with me right now?
Right. Right.
Because if I'm talking to you face to face, I can see in your eyes whether or not you're really with me or you're just agreeing, but you don't really know what's going on.
Totally.
And I like to say to people all the time, during the mortgage process, there is no bad questions. This is the largest investment of your life. Please ask questions. I want you to feel like you know way more about the subject after you're done with the transaction than when you started.
Right.
So that's why I love helping people like that.
So how long have you been in the mortgage industry space?
So I actually started in the mortgage industry in 2010,
okay,
but I actually didn't get licensed until 2020.
Got it.
Funny story on that. The reason I got into the mortgage industry was I was one of the guys a long time ago. Me and my wife had bought our home and we had an adjustable rate mortgage. I didn't know what that was.
Right.
And at the time,
I feel like most of the people didn't know what that was.
No idea.
Yeah.
No idea. And the mortgage broker, who I thought was a really good guy at the time, he helped us out. He got us into this beautiful home that we wanted.
Right.
but he never took the time to explain the nuances of an adjustable rate mortgage.
Yeah.
So essentially we had that second mortgage on our home and the rate went from 6% to over 12%.
Yep.
And, I don't want to date myself, but, back in the early 2000s, no one really paid their bills online.
Yep.
Everybody used to rip the coupon out of the book, write the check, put it in the envelope, mail it off. So when the time came and we went to sell our house and I looked down at the figures and what we actually owed on the home, I said, man, I've been paying all these years. How do I still owe all that much? Well, it's because my second rates, my second lien on the house, the second mortgage jumped and doubled.
Yeah.
So I wasn't even making the mortgage, just the minimum payments at that time. So,
and so in 2020, it's a hell of a time to get into the mortgage industry.
It was.
When did you get, was it like post-COVID, pre-COVID, when you got licensed?
Right in the middle of COVID.
Okay.
It was right in the middle. I had started, my wife's a realtor, very good realtor, one of the best, in my opinion, obviously. But she is a top 5% in North Florida. So I had always watched her. And during that discussion, of watching her, but during the time of watching her, my wife always had mentees and she would teach them the ropes, but they would always be at our house.
Okay.
So every Monday and Friday, she'd have the mentees at the house and they'd always be talking about the lender. And it was never really good talks about that lender, but it was always the same thing, Gonzalo, right? It was always about communication.
Of course.
That's the most important part of the transaction is people don't mind as long as you inform them, right? Things are going to happen. Things are going to blow up. Unexpected things are going to happen. It's a mortgage, right? Things are going to pop up. But to be able to sit there and communicate well, not just the buyer either. You got to communicate to the realtors. Yeah. The realtors are the first line of defense.
Yep.
So as I was learning and I was listening to them and I was listening to their struggles, in my other career, I was a sales manager and I always over communicated. So I'm thinking to myself, the most important part of this job is communication. And I'm a sales manager who over communicates.
Right.
Well, let's give this a shot. And I actually did a quick online test that I was able to pass it real fast. But going even back to that in 2010, when we had moved to Florida and we went to buy our first home in Florida, I met up with a mortgage broker and I really grilled him. We had a long, intense.
Now
Yes.
Now,
yes. Because I said, that was never going to happen to me again, right? So I had this long conversation with him and he started to teach me about mortgages, but I was also very inquisitive. Like as we were doing this process, I felt like I was his loan officer assistant because I was with him literally every step of the way. And when that transaction was over, and this is back in 2010, when that transaction was over, he said to me then, why don't you get your license?
Right.
You're a natural for this. You're a great sales guy. Sales come naturally to me because I like people. I like talking to people. And the other part was I was a numbers guy.
Yeah.
I come from a family business where I did all the numbers and then I was a sales manager. So I was doing all the numbers. So sales, numbers, it kind of all started to make sense together. And then I just started to look into a little bit more. And before you know it, I had the license and I was ready to go. And I jumped right into it. We didn't wait.
Got it.
It wasn't like I'm going to sit here and watch. No, we just left my career and jumped right into full-time as a loan officer.
So what was it like? I don't think I've had the opportunity to ask a mortgage loan officer. What was it like during COVID? Like with the refis, like everybody was trying to refi. Obviously after we got through the weird part of COVID, right? So end of 2020, once interest rates dropped, everybody caught wind and was like, dude, everybody was refinancing. Everybody was jumping to buy a house. What was that like?
Yeah. And I was catching the tail end of that, right? So I got licensed during the middle of it.
Right.
And then when I really went full time, I was catching the end of it. But it was wild. It was like the wild, wild west. I mean, sitting there and watching the rates drop.
Yeah.
And literally the phone just ringing and ringing and ringing. And I'm a new officer, but my phone is still ringing off the hook because everybody wants to know. I can't tell you, I always wear my name tag, right? Because it's the best free advertising in the world.
100%.
So wear your name tag. Yeah. And when I'm out and I'm wearing my name tag, what do you think the number one question I get asked is? What's the rates today? What's the rates? Yeah. What's the rates? Everybody wants to know what the rates are. And that's such a loaded question. Right. But when I first got into that, I was always trying to come up with the perfect answer. Oh, well, there's no perfect answer for that because everyone's situation is different.
Right.
There's no two people that have the same credit scores, that have the same income, have the same debt to income ratio. There's no two loans that are exactly the same. So it was a really interesting time for me as well, because while I'm trying to learn the purchase part of it, the refinance part of it was a huge part of our business.
Yeah.
So trying to juggle both of those was interesting. And then when the rates started to creep up, that's when you really started to see people digging their heels in, as they say, put the boots on the ground. And now it's time to get to work,
Right.
because it wasn't as easy anymore
Correct.
now.
Correct.
And the competition, because it's like kind of like being a realtor. Everybody wanted to get their real estate license. Everybody wanted to get their mortgage license. Well, now everybody's knows somebody. Everybody's doing something.
Yeah.
So it was a crazy time for sure.
Yeah. And so how did you handle the change, right? Because I want to say like almost there was a certain period, and I should have seen the writing on the wall, right? Because it took a little bit, because the mortgage industry got affected heavily once all the rates skyrocketed up, and then it took a little bit of a delay to affect us in the real estate, right? And so there was a short window where all of my interviews that I was doing, everybody was coming from the mortgage industry. And so I'm sure it was a crazy time when it was like, hey, everybody's refinancing. Now nobody's refinancing.
Nobody.
Like they went from like 1,000 to 0.
Literally nobody.
Yeah. And everybody grew because of the amount of business that was coming in. And then when the business disappeared, they had to shrink. Yeah. So a lot of mortgage officers got let go, you know what I mean? Totally.
Lots of offices had to close.
A lot of offices had to close. A lot of big lenders. One of the because I was in the middle of refinancing a couple short-term rentals that I have, and one of the ones that I was getting a loan from shut down, and it was like a huge company.
Yeah.
And so how did you kind of handle that, being new to the industry, immediately getting into the industry, seeing a crazy spike, getting a ton of business, and then out of nowhere, reality hits.
Reality did hit hard too. Yeah. So again, luckily for me, I had my wife as my biggest customer. Let's be honest. I mean, that helps, right?
Yep.
So I was able to lean on her.
That's awesome.
And able to lean on her for a lot of advice. She's been through it.
Right.
She's been through the training, so she knows all that's going on. And luckily for me, I'm a pretty friendly guy. Yeah. So I'm not afraid to go up. I'm not afraid to talk to anybody. I'm not afraid to get out there and promote your business, right? Because if you're not promoting yourself,
correct,
who's doing it for you?
Right.
Right. Yeah. There's the old lesson, nobody cares.
Yeah.
Well, unless you get out there and unless you do the things, like I can't tell you how many times I've heard from realtors, because all I talk to is realtors all the time. And realtors always love to say, oh man, I wish I had what your wife has. And I always say the same thing. Are you willing to do what she did to get it?
Yep.
I saw so many weekends lost, so many time away from our family, doing the phone calls, showing up repeatedly, even when there was nothing there, but doing the things. And then all of a sudden her business took off. Yeah. So I knew there was a blueprint there for doing the work, laying that foundation, getting out there, visiting the real estate offices, just walking in, not knowing anybody, but being able to walk in and say, hey, I'm just here to help.
Yeah.
And I say the same thing to everyone. If you have a loan officer, it's kind of like everybody, right? Everybody has a doctor, a dentist, a lawyer. Well, you need a real estate agent. Yeah. You need a loan officer. It's some of your most confidential, private stuff. No one likes to share what they make. No one wants to share their finances with you.
Your loan officer sees everything.
We see everything. I always say to them, we're like your lawyer. So you want to share everything with me because I'm going to find out.
Correct.
Now, I always said that too. It's like underwriters, they make the best detectives in the world.
Yeah.
Because if there's anything out there, they're going to find it.
Right.
So let's work together. Right. It was kind of always that motto I had in my career too, was, let's spend more time preparing so we spend less time repairing.
Right.
And that's the whole thing. If I can just build a solid file for you, because I know what the underwriters are going to ask me.
Yeah.
So let's just get it all on the table, man. I always say, I'm here to help.
Right.
I want you to be in that home. I want you to be a homeowner. I don't want you paying rent anymore. Again, it's not for everybody, but I just have a hard time with paying. Again, right? The best saying in the mortgage industry, every day that you wake up, you're paying a mortgage, whether it's yours or somebody else's. That's up to you, but you're paying someone's mortgage. Yeah, you're paying someone's mortgage every day.
That's true.
Yeah. So that was a big thing for me.
So really it was leaning into relationships, right?
100%.
Whether it's your wife or whoever it is, leaning into relationships is what you did when it got a little weird, and that worked.
Same right now.
Yep.
It's the same right now.
Yeah.
It's phone calls.
And that's huge. That's a huge nugget, right? Because I feel like that was happening too, where as far as me as a wholesaler investor, we got affected with all these interest rates. And I just, and my business was selling a lot to institutional buyers, hedge funds,
Sure.
and they just completely disappeared overnight.
Yeah.
Right? I feel like for us, the hedge funds were like the refis and the mortgage.
Yeah,
right?
absolutely.
And it was like everybody, the hedge funds were buying everything that they could, overpaying, whatever, doesn't matter. And then out of nowhere, they just
Gone.
stopped.
Just like the
Right?
refis,
Next
gone.
day, it's done. And it really impacted my business. And at that point, I feel like I had talked to more people in my industry, just business colleagues, whatever, than I had in the past, 8 years that I've been in the business.
Yeah.
Right. Just like, hey, what are you seeing? What's going on? How can we help each other out? And I feel like that really helped everybody who was open to, working together,
Yep.
relationships like, hey, with some hard money lenders, hey, who are you? Because like before, you didn't have to dig into those relationships because you were just getting the calls.
Plenty
and
of
business was
business.
easy, right?
Plenty of business.
But a lot of it was like, hey, I have this deal I can't sell. Who in my sphere do I know that can maybe point me in the right direction?
Sure.
Right. So we were calling a lot of hard money lenders. Hey, who's still borrowing money? Who's still active flipping?
Sure.
Right. They're the ones that know them the most. And so a lot of, shout out to Mike Grangine. He's a hard money lender here in town, and he helped us move a couple properties during this time because he's the hard money lender. He's like, yo, I got this buyer who's still looking to invest, and if you're
Yep.
looking to sell the deal, I want to do the loan, so let's
do it.
Let's roll it, right? And so I feel like it was like leaning into some relationships, and I feel like that's a huge nugget, right, for everybody listening. if times get weird, and even when times aren't weird, relationships are huge.
Relationships matter.
Correct.
So people do business with people that they know, like, and trust.
Yep.
That's it. For years, I was a sales manager. I taught sales training classes. And I said to people all the time, when you meet the decision maker, if you walk into a new account, and you want to meet, the last thing that you should be talking about is business.
Yeah.
Make that connection.
Right.
Find out who they are. Find out something about them. Because people want to do business with you because regardless of the fact, people like to see other people succeed.
Yes.
And when you're around like-minded people who want to see you succeed, that's contagious and that grows, so I've always been drawn to that demographic as well, of people that always looking to challenge themselves, right? What can I do better today than I did yesterday?
Yeah.
And trying to be surrounded by those growth-minded individuals for sure.
So what are you seeing right now in the industry, right? Feds just raised the rate again, and nobody's excited about the rates right now, right? Everybody's can't wait till they drop. No one expects them to drop, but everybody keeps saying like they're going to drop. They have to drop eventually because nobody can freaking afford to buy a house with
True.
these rates, right? And so like, because everybody's like, hey, well, I bought my, you hear that, right? Like I bought my first house and it was 15%.
Yeah.
He was like, yeah, but the prices were like freaking 30 grand.
Sure.
And, now you're paying 300 grand, paying 15% on, 300,000 or whatever. Obviously they're not 15%, but you get what I'm saying.
I
right?
know exactly what
And
you're saying.
so, what are you seeing right now? Like, is there any light at the end of the tunnel? Is there hope?
Yeah, there's always hope, right?
Okay.
There's always going to be light at the end of the tunnel because what goes up must come down.
Right.
Now, and historically, like right now, so one of the things too is I don't hide behind the fact that rates are high. Let's just address it. It's kind of like, let's address the elephant in the room.
Yep.
Because that's everyone's biggest concern. Like I said to you before, the first question I get asked, what is your rate?
What are the rates? Right.
Okay. Well, we haven't even gotten that far yet.
Right.
But, we don't even know if you qualify. We don't know anything yet. So
Yeah.
don't worry about it. But we do talk about it. Since 1971, the average interest rate has been 7.1%.
Right.
So we're not that far off
Right.
of the average of the last, 50 years?
Yeah.
We're right there. But over the last few years, people see that number 2, number 3, 3%. And that's just stuck in the front of their mind. They're not realizing that, no, owning a home is still a better option than renting.
Right.
One of the conversations we had about that specifically.
Yeah. And I feel like that was fake. The fact that rates were twos, you know what I mean? Like that had never happened
Yeah.
before. Like you can't point to a time in history when they were ever that
No.
low. And so the fact that it did happen, yes, it did happen, but it happened for a reason. It didn't just naturally happen. It was like COVID happened. The government needed everything to not crash.
Stop. Yeah.
You know what I mean? So it's like, what do? We make money free. And so I feel like it was also fake. But because of that, everybody gets used to that. They're like, yo, rates were 2 and 3. Eventually they'll come back to that.
Yeah.
It's like, that's probably not reality.
It's not.
Right.
It's not. And the other thing about that too, right? So rates of 2 and 3%, everyone has to understand that's not good for the economy.
Correct.
Because that's less money now that's being pumped back into the economy. The average first-time home buyer stays in their house 5 to 6 years.
Right.
They're on to the next one.
Yeah.
That money is now back into the economy.
Yeah.
That first starter house is now open for that next first-time home buyer.
Mm-hmm.
But people get into these low rates in that home and they're looking at saying, I'm one of those guys. I'm one of the people. Me and my wife bought our home. Our interest rate's 3.5%.
I'm never moving.
I can't move right now.
Right.
Luckily,
Right.
we've been smart about our money. We don't have any financial debt that we have to worry about. But at the same time, I understand people's feelings. I do. Right now, me and my wife have a beautiful home and our mortgage payment's only $1,600 a month.
Yeah.
Where can I possibly go
Yeah.
and pay 16%?
You can't even go to the hood.
You can't
No.
get an apartment for
Nope.
$1,600 a month.
Yeah.
So I think one of the things we have to tell people too is, again, what goes up must come down.
Right.
It will come down eventually. And that's where the refinance boom is going to come in again. There's been 3 refinance booms in the last 10 years.
Yeah.
We are going to get another one, but they're not going to be in the 2s. They're not going to be in the 3s. It's not going to happen. And again, we don't want that to happen because the biggest person it affects is those first-time home buyers.
Yeah.
How
Well,
can
we're
you
seeing
get
it
into
right
it?
now.
Yes. How
We're
can you
seeing
get
it
into
right
an
now.
affordable home?
Correct. We're seeing it right now where everybody was expecting last year, pretty much this time of last year, a year ago, everybody was like, dude, rates have gone up like crazy.
Yep.
And most people weren't expecting, or not that they weren't expecting it, but the first thing that comes to mind is, all right, the market's going to crash.
Yep.
Real estate's going to come crashing down. And in fact, what happened was nobody can sell. So we're at still a crazy low inventory. And that's forcing real estate to not crash. And in fact, it's still steady. And there's just no movement. Barely. And we're buying a house today, or we went under a contract on a house. I just walked it today. It's a great neighborhood. We're going to flip it. We're going to close on it ourselves and flip it. And there's 0 active houses in that neighborhood.
0.
There's no active houses. This is a great neighborhood, right?
Yep.
But I can think of like nobody in that neighborhood is ever going to want to sell if they bought within the last 3 years. And same thing. Hey, if I do sell, what am I moving to? I'm overpaying and my monthly payments are $3,000. Screw that. I don't want to do that.
Yeah.
And so it was just crazy when I was running comps. I'm like, how are there, like, this is a huge area. This is off of Kernan and Atlantic. And it's a huge area and there's just no houses for sale. And so that is not good for the economy.
Yeah.
Right? It just forces a stalemate.
Yep.
And we need activity. We need that first-time home buyers to be able to
We need them to turn
afford.
over.
Yeah,
we
them
need to
be
turn
able
over now.
Yeah,
Exactly
yeah.
right. Is what we need to do.
So you said that there's light at the end of the tunnel, right? What are you seeing right now that people can get creative with on the rates, right?
Sure.
There's a lot of rate buy down.
That's the number
getting
one.
The seller to maybe pay for some things at closing to make things like,
Yep.
What are some tips and tricks, I guess, that people are still able to get creative?
Sure. So the first thing is get a great agent. Let that agent negotiate for you. Seller concessions right now. Seller concessions are a huge part of almost every contract that I'm seeing come in right now.
And they didn't exist a year ago or 2 years ago.
You were paying over.
Correct.
It was, how are you going to close that appraisal gap?
I'll give you give you my car if you let me buy the house. Yeah.
My firstborn, whatever things. I know the house is $350, but I'm going to give you $450 cash.
Yeah.
No,
Correct.
we are so far away from that. So the biggest thing again it's going to be those seller concessions. The seller concessions, the biggest one I'm seeing is the 2-to-1 buy down. The 2-to-1 buy down is one of the best things that's hit this market in a while.
Can you explain that?
Absolutely. So let's say you close on your loan today and your loan is 7.5%.
Okay.
What they're doing is, when a home seller has their home sitting on the market, well, the first thing they want to do is, let's just drop the price.
Right.
Well, what most people don't realize is if you drop a home price by like $10,000, it changes the monthly mortgage payment like
nothing.
$15,
right.
$20 maybe. That's not what people are looking for.
Right.
People need a relief, and $20 monthly is not a relief.
Yep.
So we can use that same $10,000. Not drop the price of the home. Take that $10,000 and utilize the 2-to-1 buy down. So essentially what it's doing is it's taking that $10,000, putting all that money into an escrow account. So you're going to take your 7.5 interest rate and you're going to knock it down 2 points the first year. So now you're only paying an interest rate of 5.5 in the first year. And then the one part comes in where you're paying in the second year, you're paying 6.5. And then the third year, you go back to your regular mortgage. But what we were just talking about is we know rates are going to come down and the refinance is going to be there. So one of the things that I tell my clients all the time is it's really important to know that once you're my client for life.
Yeah.
You don't need to go anywhere else. If you go to the dentist, you don't go get a second opinion. You trust your dentist on that. So using that 2-to-1 buy down has been the best tool that I've seen out there right now.
Got it.
Because when you sit down and now all of a sudden you're lowering that mortgage payment by 2 points, now you're talking $400 to $600 a month.
It's huge.
In savings on that same $10,000.
Yep.
So it's essentially, would you rather save $20 a month?
Yep.
Or you're looking for that $400 or $500 a month. And the best thing about that too is, let's say 9 months from now, rates come down and I'm able to refinance your loan.
Yeah.
Well, all that money that's left over in the escrow account comes off the principal balance anyways. So instead of dropping the price $10,000 on your home, you're getting relief in your monthly mortgage payment. And then whatever balance is left over is still coming off the principal. So you're getting the best of both worlds when it comes to the 2-to-1 buy down.
Gotcha. Okay. So that you said that's like the hottest thing.
That's the hottest thing right now. It's helping a home. Home affordability is the worst it's been since 2008.
Yeah.
What is helping is that temporary relief. Because when you say to people, what's a good rate for you? And they say, oh man, I'd love to have something in the 5s. I can help you with that.
Yeah.
I can get you that temporary relief until the time comes when we do refinance that loan into the 5s.
Yeah.
Because I 100% feel we're going to be there. And again, I talk to the industry experts, right? I don't say I talk to them. I listen more to really smart people who tell me what they think is going to happen. Every single month, what I do is I go out to Michigan and I go to United Wholesale Mortgage. I write almost all of our loans with United Wholesale Mortgage. We go out there and they teach us and they educate us. And there's so much information that's out there. We just need to stay on top of it all. 2-to-1 buy downs. No one used a 2-to-1 buy down in the past because where are you going to go from 2% to 0%?
Right.
It didn't matter.
Yeah.
You didn't need that. You could take your money and put it in a regular money market account and make more money on it. Don't worry about buying down the rate.
Yeah. Yeah. And I mean, you didn't have to do seller concessions. You didn't have
There's no such thing.
You had to freaking, yeah. So that's interesting. So is there anything else that's unique, that's creative that people can do to kind of similar to the 2-to-1 buy down? Or is that pretty much like
that's the staple
thing? Okay.
That's the staple.
Yeah,
I mean, there's plenty of programs out there like bank statement loans,
right?
DSCR loans,
right? Where
you can, just basically offset the income for your rental properties, your investment properties, what you're looking for. But honestly, 90% of any seller concessions that are coming in are going for that buy down.
Right.
Because let's be honest too, who used to qualify on say a $400,000 home when the rate is 3%? They're not qualifying when the rate's 7%.
Yeah. Dude, I look back and I'm like, man, because I'm a conservative guy.
Sure, me too.
So I'm like, looking back now, I should have bought triple the house. You know what I mean? It's like
we laugh about it all the time.
Because at the time it's like, all right, 1,600, I can always afford. And you're like, I was similar numbers, right? It's like, I can always afford that. So let me go for that. But now looking back, I'm like, damn, I should have bought
everything.
Yeah,
I should have bought everything.
Triple, just the house, my primary residence, I
Yeah.
should have freaking balled out.
Sure, could have been.
Correct.
Still moving though, aren't we?
Correct. And shout out to the wifey. We got the
Yeah.
wifey in the studio.
Yeah.
Top-
That's definitely my
top-
better half.
Top 5% of Northeast Florida
Yes.
realtors, right?
Yes, absolutely.
So we'll have to do a show with I'm sorry, what was her
Jody.
name? Jody.
Yeah.
We'll have to do a show.
She's
with
the
Jody.
rock star.
Yeah. So what are you most excited about right now in the mortgage space?
That the fact that they're gonna come down soon.
So what gives you that certainty that it's soon?
So basically, right now we hit another ceiling, right? So when you're talking about mortgage-backed securities, bonds, that's what drives the rates. People don't, people have to understand that the bond market
Correct.
is what's driving the rates.
Yep. And I had to get informed of that because of the hedge funds that I was
Sure.
selling to. They would go refi on the bond market.
Yep.
They would just package up 500 houses that they bought, go to the bond market, sell it at 3 or whatever.
Sure.
And then it just kept going up. And so that's why we got affected, because they only securitize maybe once a year or twice a year.
Mm-hmm.
And so when they go to securitize, it was at 3. And then 8 months later, now they go to securitize and it's at freaking 5.
5
They're like, dude, we just lost millions.
million,
Dollars.
2%. That's
Yes.
so much money.
Correct. When you're doing, 500 houses at a time.
Yeah.
And so that's why they just completely stopped.
Yeah. Absolutely.
So, sorry, I didn't mean
So,
to cut you
no,
off
you're
there.
fine, because you basically summed it up right there.
Correct.
You're 100% right.
Yes.
So right now, again, this is the highest we've been in a while. What drives rates? Inflation. Inflation's the number one right now. So it was released again today and yesterday that, the inflation numbers, while they're coming down, Americans are still spending at an all-time high. So
Yeah.
while the Fed is trying to increase rates, right? We're going to push other rates. Look at used car loans.
Yeah.
8% on a used car loan. I mean, so how many people can actually afford a used car now?
Right.
So with all these rates coming up, it's supposed to slow spending.
Right.
If you take out some of the core items, of housing and fuel, inflation's down,
Right.
but the consumer spending is still up.
Yeah.
So the feds don't want you to borrow money, but we're still spending
Right.
and we're still borrowing.
Right.
So they're going to continue to tighten it. I don't know how much more there is to tighten, to be honest with you.
Okay.
I mean, we're at pretty much a peak now. And so we thought Q4 of this year, we thought for Q4 for sure we're going to start to see him come down. I don't think so.
No.
I think we're more into Q2. But let's be honest, too. There's a big presidential election next year.
Yeah.
And it doesn't matter what side of the party spectrum you're on. All I know is that party that's in there now does not want to go into the election with these record high interest rates. Not even record high, but record high for the sake of our conversation.
Of
And,
course,
for the
of course.
past 15 years,
Yeah.
we haven't been there.
Yeah.
People
People don't remember 10 years ago.
They don't.
People remember 2 years ago.
Yeah.
2 years ago, I bought a house at a 2.7%. And I don't care what it was 10 years ago. 2 years ago, it was 2.7.
Doesn't matter.
So whoever's in office better make it 2.7.
Yeah.
That's all people care about.
And I think to touch on, you had mentioned it earlier too, I think the biggest issue that we're going to have is, let's be honest, people are moving to Florida in record numbers.
Yeah.
We talked about it before the show. We have an inventory problem.
Yeah.
So having the inventory problem that we have here, there are so many people that have kind of been priced out of the market that are just waiting on the sidelines, waiting for those rates to drop. And then I think you're going to see a frenzy of people buying up everything, because another way to look at it too is once those rates come down, home prices are going to go up.
Yeah.
Because again, supply and demand is a shortage of it. That goes back more to 2008, through 2010, when builders stopped building. During the recession of 2008, builders essentially stopped building for a couple of years. Families didn't stop growing.
Correct.
Immigration didn't stop growing. The American family is bigger than they have ever been. So where are those people going? So now you had those years where there was no homes being built, but families are still getting bigger. So now we're back to that inventory problem again. I think the number was supposed to be like 15,000 homes in a market like this. I think we have under 7,000. We have less than half of the inventory.
It's like 6,000 something that's active.
Yeah.
And then the other day, because, in my industry, we don't really operate and after you get above the median price point, The investors, rental properties start to not make sense.
Yep.
You know what I mean? Like you can't buy a $500,000 house in cash flow, right? So like there's a certain price range where majority of the investors are playing in. And so I pulled a MLS report because we're trying to target all the houses in Jacksonville under 200,000 with a certain parameter buy box. And it was like 900 something properties. And I was like, holy crap.
Largest city in America.
Yeah.
With only 900 properties.
That's insane. It
That's
was like
insane.
Under 200,000. Yeah, it was like 980 something. I was like, geez.
Which is even more crazy, right? Because if you look at the numbers, they're saying there's 1,000 people a day moving to Florida with only 900 homes for sale in Jacksonville.
Yeah.
How do those numbers don't add up? Under 200,000.
Yeah.
But those numbers, and let's be honest, most of them are first-time home buyers, right? So they're trying to come down here.
Yeah.
And then on top of that, there was a great article, and I forget exactly where it was, but it was talking about the $100 billion that's migrated south from the Northeast corridor, where I'm from, Boston, New York, New Jersey, Connecticut. They've all come 95 south, literally 95 south. There's $100 billion transfer of money from the Northeast to the Southeast. So if you're in New York or New Jersey, you're coming down here and you're selling your house for $1 million plus. Now you're showing up in this market for 700,000. That's no problem.
Oh yeah.
That's a deal for them.
And you get the warm weather.
You get the warm weather, no income tax, the homestead. So there's so many bonuses, so many pluses to moving to Florida.
Right.
That's why you're seeing such heavy competition. And, there's other states that are going to be struggling in their markets.
Right.
Not Florida.
Yeah.
We're not going to slow down.
It's it is very market dependent, and especially our market, Jacksonville, right?
Mm-hmm.
We're unique. I feel like we're a unique market where we're kind of like a major market, but we're still a small town in a way. You know what I mean? And that's changing.
Sure.
Right. It's still, it's not how it used to be, but you can still, there's houses on, I just retailed a house, fully renovated property. It was small, right? It was a 1,000 square feet, small house, but it was fully renovated. I did everything. And I don't even know how I spent $75,000 on a freaking 950 square foot home, but it cost that much, right? I did. But yeah, we sold a fully renovated house, new roof, new plumbing, new electrical, new everything for $195,000.
Turnkey.
You can
get that
retail house. Like you can't go to Tampa and find
you're
you
not.
Can't go to Miami. You can't go to Orlando. And so I feel like Jacksonville's like that one last market where you can still kind of find those houses.
Yep.
You know what I mean? And so I feel like even just within Florida, Jacksonville is a great market.
Smallest big city around, right?
Yeah. That's a great way to put it.
We are like kind of the unicorn that's left here.
Right.
When we moved to Florida in 2010, we spent the first 6 years in Fort Lauderdale.
Yeah.
That's talk insane. About unaffordable homes and unaffordable pricing. You can't do it. We bought our home. It's a funny story. We bought our home in 2010. We paid $268 for our home. You go on Zillow now, that's a $900,000 home.
Jesus Christ.
Never mind the insurance bill.
Right.
Homeowners, my sister and mother still live there.
Yep.
My sister lives in about a 1,600 square foot home, great neighborhood, nice place, about a mile from the beach. Her yearly insurance is over $7,500 a year.
It's crazy.
That's nuts. Again, insane, home affordability.
Yeah.
Not just the mortgage, not just the rates. Now you get the insurance on top of it.
Oh yeah, and that's funny. That was the episode that I did last week was with an insurance agent.
I saw it. It was great too.
Yeah. And so it's just that insurance game is just insane right now, right in Florida.
The mortgage industry's hard.
Yeah.
The insurance is right there side by side with us because again, the affordability for insurance isn't there. And it's a shame because as a loan officer, I see everything.
Right.
And people are not being able to buy the home because their insurance policy pushes them over their debt to income limit ratio.
Yeah.
And no one thinks about it. No one ever considers, how much is going to be the taxes and the insurance? They're always concerned about the rate and what's my principal and interest.
Yeah, that's so true.
Yeah, but you got to think, you got to think of the other
it's
parts.
Probably because it wasn't an issue until now.
It was never an issue.
Right. No one ever cared.
No.
And now I am getting to the point where I'm calling my insurance agent before I buy a house. I never had to do that.
Yeah.
Never. And now I'm like, let me just triple check. Obviously, these are buy and hold properties.
Sure. Yeah.
But still, it's like, when did you ever have to call your insurance agent to see if you should buy this or not? Because you know what I mean?
It was never an issue.
Correct.
Never an issue.
Yeah.
I mean, again, I'm going back 30 years. We bought our first. It was never an issue. No one,
Right.
because you didn't have to think about it.
No, that's
Insurance was always
crazy.
affordable. And then unfortunately we get hit with hurricanes and,
Yeah.
so many insurance companies pulling out. Oh, where else are you going to go?
Right.
If
Right.
you have to have it.
Yeah.
First of all, you can't get a loan without it.
Correct.
And if you pay cash for your home, are you really willing to wager a couple $100,000 without it being insured? One mistake, one accident, God forbid, and you're out.
Yeah.
So it's that necessary evil that you have to have. It's like health insurance. You got to have it.
Right. So let me ask you this. You're in the mortgage game and you're trying to get, or not trying, you are getting creative, right? On making things happen outside of just the things that you can do on paper. Because we've been talking a lot about stats and all that, but like, what do you do? Because any mortgage lender can say, yeah, do the 2-to-1 buy down. What, you know what I mean? Like, what makes you different?
I'd say the first thing that makes me different is, the greatest ability is availability. Answer your phone. That's the realtors. Part of my day all day long is reaching out to call realtors.
Yeah.
In this market, I can write all over Florida, South Carolina. I'm licensed in many states.
Okay. Oh, that's good.
But yeah. I'll get into that. But one of the most important things is I have a 954 number. So I spend the majority of my time calling numbers in this area, 904 numbers. I'm calling local realtors in this market.
Right.
So many of them don't answer their phone. And I look like an out-of-town buyer.
Right. Yeah.
Or out of town. I'm just out of town. So as a realtor, you need that phone. I mean, everyone's always going, I need to buy leads. I need to do this. Oh, answer your phone first.
Yeah. I love it. I went to a networking event like a month ago or something like that. And everybody had to introduce themselves. And one guy just introduced himself. He's like, hey, I'm such and such. I'm a realtor. And I actually answer the phone. And everybody was like, hey, it was hilarious.
I do the same thing all the time.
But I know it sounds so minuscule, but that's so important.
Yeah.
Yeah. So availability.
And teaming up, finding the local real estate offices, working with them, going in and putting on instruction classes for realtors to learn.
Got it.
Because let's be honest, realtors don't know much about the mortgage industry, nor should they have to. That's what I'm here for. Yeah. As a realtor, your job is go get the next one. Correct. Get the next one. Correct. You got it. You got them under contract. You pass them off to me. I got you. And I always say to my realtors, I have a very structured schedule. Monday is I'm reaching out to realtors, trying to make new connections, preparing for Tuesday. Tuesday is your update calls. So on Tuesdays, I'm calling my buyers. I'm trying to call the sellers, introduce myself, because if you're selling, what are you doing? You're probably buying again.
Right.
So if I know you're selling, you're probably going to be buying. So if I can get that buy, so you can get the buyer, but and the most important part, the listing agent and the selling agent.
Right.
I call them every Tuesday and I give them an update and I say to them, hey, as we move forward, congratulations, we're under contract. I want to let you know you're not going to have to worry about this transaction. I'm going to call you every Tuesday. I'm going to give you all the updates you need. Of course, my phone is always on if you have other questions, but don't worry about this loan because on Tuesday, you're going to get your update. You're going to know exactly where that deal stands. If all things go according to plan, which they should, we're going to talk for the next 4 Tuesdays in a row.
Yeah.
After that 4th Tuesday, we're closing. One of the things I love about being a mortgage broker is we get updates from like United Wholesale Mortgage, who send me my numbers all the time. My average clear to close time is 14 days. Wow. Let me repeat that. My average clear to close time is 14 days.
I can't even do that with some of these investors.
It's all about the preparation, right?
Right.
You prepare that. When you submit a file and you want to go to get that pre-approval letter, and that's a big difference too. I'd like to talk about pre-qualified versus pre-approved. Don't take a pre-qual, please. But when I submit that to the desktop underwriter, it's kicking me back to me saying, yeah, this loan's going to be approved. And here's the 6 conditions you need, or here's the 3 conditions you need. So before I submit that file to the actual underwriter, I already know what they want.
Yeah.
So as long as I collect everything ahead of time and I submit it to them, bam, we're closing. And there's no better feeling than when I get to call a realtor 2 weeks early
Oh yeah.
and say, hey, man, you know that property that we're closing on? It's done. I'm going to send you a copy of my clear to close right now. Congratulations. Let's go get the next one.
Yeah, and not even just the realtor, but also the seller.
The
right?
seller.
As a flipper, because when you flip houses, you're now a seller on the retail market.
Yes.
Right. And so now you're like, hey, we have a 45-day contract on the property. And then every once in a while, we get that proactive mortgage or realtor, whatever it is, right? That's like, hey, we can actually close early. And you're like, what?
Yeah.
No way.
Yeah.
Yeah.
So
we got to clear to close.
Yeah. And I have a great example of that for you, right? So I have we were at Universal Studios taking a quick family vacation. I got a call. Friend of a friend gives me a lead. The woman says to me, hey, I already found the house. I just need you to write the contract and I need a loan. Great. I'll send you the link for the application. She goes, I don't need you to tell me. I've done this before. I just need you to give me a loan. Great. No problem at all. I refer her to one of my realtor partners in Clay County.
Yep.
Said, hey, I just need you to write this offer up. We're going to be great. Sounded easy, right?
Always do.
Until the appraiser went out there and came back with a $30,000 cure to cost to cure. So I had to say, oh my God. So now let's put on the hats because we're always problem solvers. We're always solving a problem. I'm always trying to put the puzzle together. Where's the missing piece? So we hit the snag on this. And I said, okay, well, I need to know what needs to be done. I call the realtor and she's busy. She's a great partner of mine. Very important. I said, I got it. So I'm going to drive over there. So I get in my car and I drive over to Clay County and I get out and I'm walking the property. Well, at the same time I'm walking, this car pulls up, nice guy, comes up, very attractive woman. They come out, they're a husband-wife team and they're investors. And he says to me, you must be the buyer. I said, no, actually I'm the lender. And I had my name tag on, of course. And the wife looked at it and she goes, you have your name tag.
What?
And he said that, what are you doing here as a lender?
Yeah.
I said, because I care.
Wow.
I care. I gave these people my word. I'm going to get them into this house. I gave them my realtor partner.
Yeah.
And all of a sudden it's turned into a lot more than we thought. And what? I can drive over there. I'm not above getting over there and getting dirty. So I ended up talking to this guy and now he's become a great client of mine.
Oh,
and that was just a couple of weeks ago. And he's already sent me some leads and we're working on things together. But it's about just showing that you care. Because I could have easily said, oh, well, I don't know.
Yeah.
I don't know what to do. I can't get it done. I can't get it done. But I could get it done. And I knew that.
Right.
So just by driving over there, introducing myself, I made a great connection. By the way, all the work has been done in that home and we're closing next week.
Oh, that's awesome.
Because you put the puzzles together. That's what we are. We're problem solvers, investors, real estate agents, mortgage, insurance. Let's solve the problems.
Yeah, that's awesome. And so I guess why do you feel like people don't do that? Why
so I have my
why
thinking.
Is it so unique to work hard, to show up, to go the extra mile?
I think we've come a little soft. I think people, the entitledness and the participation trophies, so to speak.
Okay.
Where, if I'm up working at 6 a.m. and you don't have to do anything, but we're getting the same.
Right.
Well, what's the motivation then?
Right.
I come from a family business where you get up and you go to work. Doesn't matter if you're hurt. Doesn't matter if you're sick. It doesn't. Get up and get going. I have a responsibility. My responsibility is to my family, make sure I keep a roof over their head, food on the table, but it's also to my clients. They're trusting me with their life, essentially.
Yeah.
What do? They save their whole life to go buy a home. And just because I hit one little snag, I'm going to turn my back and walk away.
Yeah.
I couldn't sleep at night like that. The softest pillow in the world is a clear conscience. And when you go to bed at night and I know I did right, like that Friday, I won't lie, I felt fantastic.
Hell yeah.
I felt so good. If you help enough people get what they want, you will get what you want.
Correct.
And that's what it comes down to. Again, it's just helping people. They just want to be helped. That's all. And they want to know they can trust you. And I also think that during this crazy time in the mortgage real estate industry, they didn't have to do what you always had to do because the phone is ringing.
Correct.
I'm a member of a BNI group, Profit Partners. We meet every Thursday. Well, that seat became available because that last lender just sat on and got fat and lazy and said, I don't need this anymore.
Yeah.
Well, I know for a fact he's regretting that now because he's already tried to get back into the group where I'm already there.
Oh yeah.
So it's like, no, I just think people came content.
Right.
They didn't have to work as hard.
Right.
They didn't have to do the extras to make themselves stand out because everybody's doing it.
Yeah.
You know, you got 2%, I got 2%. They didn't have to do it. You know, the amount of homes that are being sold, the amount of refinances, people were not grinding it out. And not only the fact of not grinding it out, again, it comes back to the fact of preparing.
Yeah.
Are you preparing for this? Are you doing the best things that you can do to prepare for this market? This is the most challenging market we've had since 2008. So what are you doing to stick out differently? I'm going to real estate offices. How many times have I had to cut my commission? More times than I want to think about.
Yeah.
But that's the necessary evil right now.
Yeah.
So you got to do those things.
And that says a lot, man, because I mean, if you look at the long term, right? What's going to keep me in this for the long term?
Mm-hmm.
What's going to keep my name out there? What's going to get me, hey, maybe I got to cut my commission right now, but when they go to refi, they're going to call me. When they sell this property and they buy another one in 5 years, they're going to call me.
Mm-hmm.
Why? Because I was willing to cut my commission.
I was willing to work with them.
Correct. Yeah.
A little concession for me goes
Yeah.
a long way for you.
Correct.
And it's kind of like, okay, now I need you to tell your brothers, your sisters,
Yes.
your cousins, your
Yes.
family, your
Yeah.
neighbors, your everything.
Right, right.
And it's never about the quick score.
Right.
It's always the long game.
Yeah.
And the
I
long
agree.
game now is planting seeds for 24,
Yeah.
25,
Yeah.
planting all of those seeds now. So all the
Right.
work we're doing now, yes, I'm not getting immediate results from it, but it's like starting a new business.
Yeah.
You don't see any profits when you start a new business.
Oh, I know.
Exactly. But once you get that foundation
Yeah.
and once you start to pick up a little bit of momentum, then all of a sudden now it's coming in multiples.
Right,
And it's
right, right.
growing. And now you're sitting back watching it.
So you mentioned you're teaching classes, going to speak. What was it that you were speaking at where Mike saw you?
Yeah. First time home buyers.
First time home
First
buyers.
time home buyer
Okay.
seminar. So there's a company called Interiors Revitalized. They do all your staging for your open house for any.
Oh, Mike, did we have them on the podcast?
No,
Is
there's
Mike
a
like
trade
that?
show.
Yeah.
Oh, they were at the trade
So
show.
Christy
Okay,
and
okay.
Kayla, they
Gotcha, gotcha.
Christy owns Interiors Revitalized. And the only reason I know Christy is because my wife's selling homes. My wife won't sell a home unless it's staged.
Oh,
Not selling any open homes. So I learned that. Well, while doing that, I was introduced to Christy and Kayla. So they called me up and said, hey, we decorated this apartment community. We're going to put on a first-time home buyer seminar, and we're better to meet them than an apartment community. So most of the people in an apartment community are looking to be first-time home buyers. So it was a better place to do it. So they called me up, asked, and that's one of my passions, though. You know, there's no better feeling at a closing table than when you get to see that first-time home buyer get their keys.
Yeah.
I become part of the family.
I bet.
You know,
Yeah.
and people consider you part of the family because we become so tight and so close during this whole process that at the end of it, that's the ultimate joy of we did it. We got here. I know there was some bumps in the road because there's always bumps in the road. My job is not let you worry about the bumps. I take the bumps. I will get through it. I will navigate the choppy waters. I will navigate the unknown. I will see you. It's like what I always say to a realtor, right? When you talk about pre-approvals and pre-qualifies. If you get a pre-approval from me, you're getting to the closing table.
Yeah. So what's the difference between I don't think I know the difference
Sure.
between a pre-qual and a pre.
Yeah.
Pre-approval.
So a pre-qual letter is basically, you know, Mr. and Mrs. Smith call up a lender, and the lender says, hey, what do you make for money? I make $1 million a year. You got any bills? I got no bills. Great. You're qualified. They send you, they don't verify anything. So a pre-qual is just a piece of paper. It's not worth anything.
Got it. Okay.
When I give you that pre-approval letter, not only do I give it to the client, but I'm reaching out to that listing agent. So when a real estate agent, a buyer's agent makes an offer on a selling home, so now the agent has officially made an offer, I personally reach out to that agent and say, hey, listen, Mr. and Mrs. Smith, I verified their income. I verified everything. I have underwriting approval. I'm going to send you a copy of the underwriter's approval on this loan to let you know that, no, they're not just qualified, they're approved.
Right.
And so the difference is once I've already verified everything, I know that I'm getting them to the table. I won't give a pre-approval letter unless we do the whole application start to finish.
Right.
It's my name. It's my reputation. And as an investor, right, as a seller, you want to be able to know that, hey,
100%.
man, does this person really qualify?
Yeah.
Are we really going to be able to close this loan, or is it just a piece of paper?
That's part of the process. If we get multiple offers and you know what I mean, it's like well, let's call the agent, get that information, because a lot of times they'll sometimes they don't submit it with the letter, so we have
Yeah.
to call the letter, get the letter, and then we got to call the mortgage broker.
Yeah. And what's better than when the mortgage broker beats you to the punch?
Correct. That's never happened to me.
Yeah,
so
see, that's the difference.
I don't know.
That's
Hey,
the
if
difference.
I was buying a house, I'd call this guy. That's awesome. Do you do lines of credits as well?
Yeah, so
HELOCs?
our company does HELOCs.
Okay.
We do land loans. We even do solar panels. I actually don't sell the solar. I can just refer you to
Do
our
you do
company.
HELOCs?
We do HELOCs.
But do you do HELOCs?
I do.
Okay.
I do.
Because I'm about to thinking about doing that.
We will sit down and run it.
I'd rather do it with you.
Yeah, we'll sit down and run it together. So
Okay.
it's because right now, right, we just can't survive on the mortgages.
Right.
There's just not enough.
Yeah.
And let's be honest. So what is one of the things that come along with, all right, if you don't want to tap into that equity in your home, you don't want to lose that 3% interest, let's look at a temporary solution. Let's
Right.
look at that HELOC.
Yeah.
This way you get to keep your rates.
Yep.
Let's borrow some money temporarily. Yeah, the rate's going to be higher. Again,
Right.
we don't
Yeah,
hide
yeah.
behind that.
Of course.
You address it right
Yeah.
away and say, yeah, you're going to pay more for this. But it's a great way to pay off that debt.
Yeah.
Instead of paying 5 or 6 bills, let's pay 1.
Correct.
Let's
And that's exactly what we're doing. We're me and my wife, we talked about it. We want to pull a HELOC, pay off the cars
Yeah.
with the HELOC, and then just pay the HELOC.
Yep.
You know what I mean? And we're just gonna make a savings just from doing that.
You are.
Right.
I
And
mean-
so we submitted the initial information. Now we're getting blown up by freaking
Yeah.
15 people. And
Really important too. So, and I say this to people, when we fill out an application, when you fill out the application, I'm going to send you a separate email. It's the do not call list.
oh hell
Get yourself on the do not call list because people don't know. But when I submit your credit to Advantage Credit and they run the 3 bureaus, those bureaus turn around
They're
and
selling
sell
that
your
shit. Hell yeah.
information.
they gotta make money.
They absolutely, but it's to the point now where I've literally, and customers are getting 50 plus calls. So I'm going to say, hey, listen, I'm going to run your credit today. And I don't say run. I say, we're going to review your credit. Because I also like to say to a homeowner, when's the last time you looked at your credit?
Yeah.
Do you even know what's there?
Right.
And especially if you run someone's credit and you come back and you say, well, your score came in at 650. How is that possible? Well, did you know you have this bill that was never paid?
Right.
Most times people don't even know about it,
Right.
especially if they moved.
Yeah.
You have an old mailing address. You
Yeah,
forgot
yeah.
to change that one address.
Yeah,
That bill is
yeah.
still out there. So you got to make sure you're reviewing that credit. Because a
Yeah.
lot of times after I review the credit and I sit down with you again, we can get those things repaired.
Right.
We can get
Right.
things removed from your credit. There are
Mhm.
credit repair companies that are reputable,
Right.
and we do
Right.
deal with them. But I'm able to look at it. I'm not a credit repair specialist by any means. And I don't claim to be. But there's also a lot
Yeah,
of
but
common sense.
Once you've seen enough things.
Yes.
Yeah.
And there's actually a tool that comes from the credit bureaus called a wayfinder. A
Mm.
wayfinder is exactly that. They're going to find a way to take your credit score from 650 to 690.
Mm.
They're going to find a way to get you out of the 500s into that, because for a conventional loan, you got to have a minimum credit score of 640.
Got it.
The best loans you can get besides VA loans, and thank you for our veterans, thank you for all your services. Those are our favorite loans to write because, again, as a military town, we get a lot of veterans here.
Yeah.
And they're coming strong. So, but at the same time, being able to help someone say, hey, listen, I can save you a lot of money if I can get your credit score just a tad bit higher. You're at 630. I can just get you over 640. And I'm going to save you because
Yeah.
if you have to go an FHA, nothing wrong with an FHA loan. You usually get a lower rate, but you're also going to pay what's called an FHA funding fee.
Mm.
An FHA funding fee is a 1.75% fee on that loan amount.
Oh wow.
And that's just a fee that the bank collects. You don't get to have that.
Oh wow.
It doesn't
I
come
didn't
off
know
your
that.
equity. Yeah, it doesn't come out of your equity. It doesn't go to the
Mm.
principal. The bank says, well, unfortunately, your credit score is lower. You don't qualify for this. So we're going to give you this loan, but we're also going to charge you this extra
Yeah,
charge
pay to
here.
play.
Pay to
Yeah.
play. And they take that money and they
Yeah.
put it in their pocket.
Right.
And the conventional loans are going to get you the best because you're not paying that.
Right.
Even on a VA, there's a VA funding fee. You got to pay on that VA funding fee as well.
Yeah.
Unless you have a disability, 100% disabled, you're not paying any funding fee.
Oh wow.
But that's
I
again
didn't
where
know
it
that,
comes
yeah.
to the fact of sitting down with your client, getting to know them.
Yeah.
There's not one mortgage fits all. It's just not. You need to sit down and listen to people. People love to hear themselves talk. We need to do a better job of listening
Yeah.
because if you listen to people, 99% of the time, they're going to tell you what they want if you just listen to them.
Mm.
And after they tell you what they're looking for, then you put the puzzle together for them and make it easy for them to understand. Don't come at them with crazy mortgage terms and loan to values, DT.
Right.
They don't care about that.
Yeah.
I always said, one day we had the pest control guy at our house trying to explain the pests. And my wife says, I don't care.
Yeah.
I don't care what the problem is. I just want it fixed.
Yeah.
And he laughs. He's a good friend of ours. And he said, yeah, of course. Sorry. Just trying to help us. But people want the problem fixed.
Yeah.
There are people that want to know all the like me. I wanted to know all the nuances of a mortgage because I was burnt the first time.
Right.
So I wanted to know every single detail. Whereas there's other people say, I don't want to know anything. I've bought a home. I just need to know what my payment is. What's the rate? Send it to me, please.
Mm.
Great. It's on its way.
That's awesome, man. But dude, we're an hour in.
This is awesome.
I just checked my phone. I'm like, oh shit, it's an hour. This is amazing. We definitely need to do round 2 for
I'd
sure.
love to.
Probably schedule it out a couple months so we can regroup quarter
Sure.
4 and be like, hey, what's going on?
Hopefully I'm coming in and saying, man,
I
this is
know.
great. Rates are
I
way
know.
down. Let's get going.
Yeah.
But there is going to be that refinance boom coming.
Right.
People need to be ready for that.
I hope so, man.
I know
hope so.
I am.
I
And
know
again, that's what it's saying about planting those seeds now.
Right. Yeah.
Letting
But I
them
definitely
know.
will reach out because we're
Please.
literally doing the HELOC process right now.
Yeah.
And so we'll definitely talk for sure. And then we definitely got to do a show with Jody here.
Yeah, you do. Yes.
Sounds like a rock star realtor. And we always learn. I feel like, in the mortgage industry and the realtor industry, the wholesaler, investor, like we all pretty much take the same actions,
Yep.
just in a different way.
That's it.
But what realtors do that crush it works for wholesalers, works for mortgage brokers, works for, you know what I mean? And so anytime I can get any stage time, right? I
Sure.
like to consider this a stage,
Yeah,
right?
absolutely.
Anytime
I
get
jumped
it-
at this.
yeah,
Yeah.
anytime I get stage time with a top producer, I'm in. I do this selfishly, right? I love that I get to pour into everyone, but I just got an hour with somebody who's crushing it in the mortgage space and learned a ton. Honestly, one of my biggest takeaways that I'm going to immediately implement is the day of the week update.
That's the biggest one.
Yeah, because we have updates, but every file starts on a different day. So it's messy, right? It's like, all right, we're going to give this person a 2-week update, but that for this file, it's on Tuesday. For this file, it's on Wednesday. Like, let's just tell the sellers, hey, we're going to give you an update on a weekly day. And now every day I can just check in. Hey, instead of checking Wednesday, did you update this person? And then Thursday, did you update this person? And whatever. It's like, if we just do our updates on one day, sellers can anticipate it. And it makes our internal life easier because we know we give updates on Tuesdays.
The best
Right?
thing about the updates too is when you're given the updates, it doesn't take you 5 minutes
Right.
because you're updating them every week.
Correct.
So it's not like you're saying, okay, I know we haven't talked for a month, so we got to
Correct.
cover nuts to. No,
Right,
you're
right.
giving them that update every week.
Right.
I have so many realtors. It's, oh God, it's Tuesday. They're all excited to hear from me because they know
Right.
it's Tuesday.
Yeah.
It should only be 4 weeks.
Thank you.
That's awesome. That's awesome.
Thank you
No, that
so
was a
much.
huge
This is
takeaway.
amazing.
No, that was awesome. And if people want to learn more about you, learn from you, how can people reach out?
So my biggest thing again is the phone. And
Okay.
I always say, call me, call my phone, visit the website. So we own Casella Sales Group and my phone number, 954-892-1930. And also you can check out First Coast Mortgage Funding. I'm available there. And Facebook.
Yeah.
Let's be honest. The easiest marketing in the world, Facebook.
100%.
Just look up my name,
Yeah.
Joseph Casella. It's been a pleasure. This has
Awesome,
been
man.
fantastic.
Dude, I appreciate it. This has been fun.
Yeah, it has
Yeah.
been.
Awesome. So everybody who tuned in, thank you so much for watching. And if you tuned in late or maybe you're just catching the last part of this, make sure that you rewatch this on our YouTube or on my Facebook page. And as you guys know, I will see you guys next Tuesday at 6:30 p.m. Eastern